Goldman Sachs releasing a new investor sentiment survey following the conclusion of its annual healthcare conference this week. Joining us now with the key takeaways is Asad Haider, Goldman Sachs sector strategist and head of the healthcare business unit. Asad, good to have you. First question is just about, I don't know if you track this over time, but does this sentiment survey tend to be at all predictive?
Thank you for having me. It's a great question. This sentiment survey actually tends to be quite contrarian. It is usually reflective of investors' current positions, and when you go back and you do a back test and you score investors on what they had predicted, it actually tends to be quite contrarian. There has been one exception, actually. Eli Lilly is the name that during last year's survey, investors did vote to be one of the best, the top performers over the course of the year, and it got voted again this year as one of the top performers. And obviously, that the outperformance of Lilly has been a big theme in healthcare, and we'll see if it continues to play out. But that has been one exception where the survey has actually not been as contrarian as it has in other areas.
And so when you say contrarian, it sounds like you're saying people are talking their books, and in a lot of cases they end up being wrong. So maybe in a way you want to bet against them. So that's great context. Tell me what's the beaten down name that they expect to rebound, and you think that's because maybe a lot of these investors are holding it?
Yeah, it's a great question. I think it's important just to contextualize where we're coming from in healthcare. I mean, healthcare has been struggling it was one of the, it's trailing the market year to date. It's up about 6% on the year versus the broader S&P, which is up about 14%. It was a big underperformer last year. But when you scratch beneath the surface, there has been, similar to the rest of the market, a concentration of outperformance in some of the secular winners. Obviously, Eli Lilly is at the top of that. It's up about 50% on the year, and it's really carried the index. But right beneath that as well, there's been a handful rather of names where investors have been leaning into for either product cycle momentum or upward earnings revisions momentum. And there's not many. There's about 6 or 7 of them, Intuitive Surgical and MedTech, Boston Scientific. But when you start getting below that, there's not a lot of excitement on a potential snapback. And I think there's 3 things at a high level that are driving sort of sentiment headwinds towards the sector broadly. Number one, on the micro, and this is probably the most important, we've been sort of caught in a negative earnings revision cycle across swaths of healthcare. Remember, the sector was a big beneficiary of the pandemic, and you're now coming out on the other side of that. And so you're still seeing downward earnings revisions in multiple areas, particularly at things like life sciences tools, parts of pharma, parts of managed care. Second, on the macro, you've had these rotations into tech and leaning into cyclicals and industrials, et cetera. And then there's also policy concerns as you move into an election year. And I think that latter point is probably going to be really important when you go back and you look at prior election cycles. What tends to drive stocks is earnings revisions rather than valuations. And
well, I got to call out before we run out of time, Biogen, because that's a name that's been beaten down. It's off of its April lows, but not far enough for a lot of investors. And in the survey, a lot of people thought that it would do a lot better in the back half. Does that reflect an overall expectation here about the area that Biogen is in?
Yeah, they are in the Alzheimer's product cycle. They have a new drug called Leqembi, which launched for Alzheimer's about 10 months ago. And I think part of the problem with Biogen is that the early launch has been very slow. It hasn't really been translating into numbers upside. And so that's led to the stock struggling, and people have been trying to call that inflection for a while. But I think what's driving that optimism right now is that in the first quarter, for the first time in several quarters, you actually saw earnings inflect, and it was an earnings growth quarter. And at our conference, the company sounded very confident that the accelerating momentum that you're finally getting behind Leqembi is starting to pick up. And they were citing some real-time examples of doctor feedback and other things that they look at just to measure the launch. And it seems like you're finally at a point where things are starting to inflect. And I think that's driving that optimism. And so if that does play out, that probably, the stock probably does snap back.